What's going on, guys? Hammy here with the Trading Initiative, and I just want to upload a really quick video on how to actively use one of the Trading Initiative's biggest edges in the market, and that's finding strength throughout different sectors and industries on a daily, weekly, monthly, quarterly basis, okay? So if you're within the Trading Initiative, we do this 3 to 5 times a week, right? We do this during our meetups, we do this during our Sunday night prep sessions, etc. And the underlying idea is that we are looking for relative strength or relative weakness in the market compared to the major indexes and indices, right? If you're not in the Trading Initiative, maybe this is an entirely new concept for you, and hopefully you will learn something. So we like to trade, if we're going to the long side, with this idea in mind. If you want to beat the market, you should be buying the things that are beating the market. Otherwise, right, you should just hold one of the indexes, SPY, QQQ, etc. So how do you actually find the things that are beating the market? How do you find the sectors and industries that are beating the market? Koyfin.com is going to be your first step. There are other services that do this as well. This is free. Why not sign up for free and go through the entire process that I'm about to show you, okay? It doesn't take too long. So here's your starting screen, bunch of different metrics and stuff. If you really like this sort of macro data, this is a treasure trove of data here that you're going to really enjoy looking at. But where we want to live right here is market dashboards, and then we want to go down to U.S. sectors. So when this populates, what we're going to have right off the bat is we're going to have the U.S. sectors tab here enabled. We're going to have all of the major U.S. sectors in their ETFs listed, right? We have technology, communications, utilities. All of these different sectors are going to be represented by their ETF names, XLE for energy, XLK for technology. And over here on the right, we actually have a chart, right? And we can actually scroll through on different time frames and see how each of these sectors has been performing. So if we go to quarter to date, it's going to shoot us back to the beginning of April, and we're going to be able to see over the last 6 to 7 weeks, materials, XLB, has risen the most, followed by finance, real estate, healthcare, energy, communications. Then we have SPY, the market index, right? This is what we're talking about. If you want to beat the market, you should be buying things that are beating the market, right? So everything above SPY here, communications, energy, healthcare, real estate, finance, and materials are all up over the last quarter on SPY. Whereas consumer staples, XLP, you have your industrials, XLI, utilities, XLU, technology, XLK, and consumer discretionary, XLY, below the market index. So if you are looking to go long, please, wouldn't it make sense to at least start by looking at the things that are beating the market? Your materials, finance, real estate, healthcare, energy, and communications. This is over the last quarter, so about six-ish weeks. Let's go month to date. This is going to give us about 2.5 weeks worth of data. So we're starting to compound down the time frame. Now what's up over the last, 2.5 weeks here? We still have energy. We still have materials. We still have healthcare. We still have finance. And industrials is up there. Listen, hopefully you're getting a little bit of an understanding here that maybe the value plays coming through in energy, materials, healthcare, finance, consumer staples, and industrials have been outperforming the growth plays, which are generally looked at with XLC, XLK, and XLY. So over the last quarter, usually, specifically if you're swing trading or position trading, value has been where you should have been living, right? If you're day trading, it's going to be a little different, but strength in the market has been shown through value plays such as energy, materials, healthcare, financials, consumer staples, and industrials. But as we can tell, month to date, we have peaked in a few of these value plays, and it looks like we might be starting to recover in some of these growth plays. You can see that the trends are starting to change here, right? We have a declining trend. It doesn't have to be very technical. You don't have to draw trend lines or anything. Just look. If you pull up XLK in particular, you can see that we have been in a downtrend for a majority of the month to date, the last 2.5 weeks. But where are we over the last 2 days? It looks like we might be starting to create a higher high for the first time in 2.5 weeks. This should pique your interest. Go down to XLY. It's lagging slightly, but generally XLY and XLK are going to move in tandem. XLY is going to move a little bit slower because it's very top heavy, with the majority of the ETF constituting Amazon. All right, so it's going to move just a little bit slower, but XLK starting to show a little bit of an uptrend here, possibly. XLY starting to show a little bit of an uptrend, possibly. So if you're looking to go long in some of this stuff, and this is the first time you're looking at this data, wouldn't it make sense to maybe look at the stuff that's currently in an uptrend? You have XLY, XLK. Like I said, this is 2 days now that it's showing some relative strength over the market. You have XLC, which is your Facebook and Google names. And then you have your XLRE, which generally not a whole lot of people are going to be trading, specifically if you're trading options. They're not the most liquid, but it's still a sector that you should be looking at. And XLU, another one that most people are not going to be trading, but it is trending upwards, right? So you have some laggers that have been lagging over the last quarter. We just looked at that quarter to date that might now starting to be coming up, right? It's not confirmed yet. 2 days does not necessarily mean a trend change, but you should be cognizant of the fact that we are starting to create a higher high. Really quick, just so you guys can see that higher high one more time. XLK, we did pop up near May 7th, but we never came up and over that 0% where we started, right? So it's not a higher high. We drew down again, all the way down towards -6. We popped up again, just normal ebbs and flows of a downtrend. You take 2 steps down, 1 step up, 2 steps down, 1 step up. Came down to 6, popped up. We were unable to create a higher high. We were unable to get back to that -1 area where that previous high was. But now look where we're at today as of watching this. We're at -2, which is higher than the previous local high. So yes, we are starting to show a potential trend reversal in some of these growth names, consumer discretionary and technology and XLC. And some of the value plays that have been leading over the last quarter are starting to show some, not necessarily weakness, but some cracks. Energy for sure is showing weakness here. We can see that. It doesn't matter if it's geopolitical based or not, which in my opinion right now it is. We're just going to focus on the price here because that's the only thing that matters to a technical trader is price. That's what pays us. XLE is showing a downtrend. We're starting to create a lower low, so maybe it's time to not be looking at energy plays to the long side. They've paid out over the last quarter, as we can see. Once again, up until this latest drawdown, XLE was in second place here, up 11.5% on the quarter. But now we're starting to draw down hard. We've lost almost 50% of that already, right? So go back to the month to date. Maybe energy is not the right place to be looking for a long position right now. XLB, although we did not hit a lower high, is starting to show a more neutral trend here. XLF, a more neutral trend. We're no longer showing that push up after a drawdown. So here we drew down, then we pushed right back up. We created a higher high. This is still an uptrend. We came down. We did not hit a lower low. I want to be 100% transparent. So we're not technically in a downtrend, but until we see XLF pop back up and over this area, we're not in an uptrend. So maybe this would be an opportunity just to skip XLF for now. XLE for sure. We're probably not going to want to look at this yet because it might even be a shortable opportunity here. We have a lot to get back. But XLF and some of these that are starting to flatten out, maybe just opportunities to avoid accidentally buying something that might not be showing relative strength here. So we have a lot of the value plays cooling off where the growth plays are starting to come back. Okay, so now we're going to go to the 5-day, kind of get the what's been happening over the last week. And we can see right off the bat, actually, we can see the energy where it took a nosedive. I said that this was probably geopolitically based. We're not going to get into it in this video, but you can see it just completely took a nosedive and continues to nosedive here. So over the last 5 trading days, you can see who or what sector is actually leading. It's technology. It's communications. XLY is lagging. Once again, it's top heavy with Amazon, but XLK, XLC, and XLY are going to be your general growth sectors. And then you have your value sectors, your industrials, materials, financial, and energy. Those are the big ones that people look to gain exposure when money's flowing into value. These are starting to underperform. So a day, 2 days, 3 days does not necessarily mean an overall trend change, but after the 3rd, 4th, or 5th day of a downtrend, you might be looking at something here. This might be piquing your interest from a swing trading perspective. All right. So definitely on the radar, value could be, starting to show a little bit of relative weakness over the market. This could be the beginning of another shove up in growth, which would completely destroy the narrative that a lot of people are trading right now. So maybe that is the most likely outcome, right? And then we pull back on the daily, what we're looking at intraday here. We see once again, XLE is down the most, XLF, XLI, XLB, they're all down the most. So value, once again, the trend continues. We saw in quarter to date that these were the biggest gainers. You go back month to date, you see that they're starting to underperform. You go back 5 days, you see that they're definitely starting to underperform. And you go back on the daily, and there's no doubt in your mind, which one would you rather own today, right now? As of me recording this, you should probably be looking at your tech plays or your communications plays. Once again, XLY held down a little bit by Amazon, but that's fine, right? They're all up and over SPY, which is your biggest metric here. You want to look to buy the things, at least if you're following the trading initiative method, you want to be looking to buy the things that are above SPY or are showing a shove above SPY. And if you want to go short, look at the things that are performing worse, right, than the market index, which would be your value as of right now, which is a complete narrative shift that we have been trading over the last month and a half. So we're going to go back to quarter to date. We're going to get rid of sectors. We're going to look at U.S. industries. And we are going to just do the exact same process here. Quarter to date, we can see which ones are up the most. We have GDX, which is your gold miners, your AMLP. Your AMLP is an oil-based industry, and we can see that this actually is slightly drawing down as well, not as bad as energy sector in general, but AMLP, slight drawdown here. You have XME, which is going to be your metals and mining, which is definitely drawing down here. Your OIH, your oil services. You have KIE, your insurance. So a lot of these are value plays still, right? A lot of these are going to be your value plays. And with the exception of GDX and probably some of the gold stuff, a lot of these value plays are going to be down because the entire sector is down, right? So we look at the overall sector first, the energy sector, and you're going to have a lot of these industries within that sector. OIH being one of those ones that's in energy, it's down. You have AMLP, which is in an oil play, which is also in energy, and that's down. Just keep going down the list, right? VNQ, your rights. That's not going to be a whole lot of XLRE, contrary to popular belief, but it is up, right? Along with XLRE is showing some strength there. So all of these are above SPY over the last quarter to date. And then you have some of the really big growth sectors that are underneath, specifically clean energy, right? PBW, TAN, solar energy. And what have we been talking about for like the last 5 months in the United States? It's this semiconductor shortage. Here's your semiconductor ETF right here, one of them, SMH. We have completely underperformed within the entire industry, even though we have a quote-unquote national security threat. So this is a good lesson in not just buying stuff based off of a narrative, because if you had bought this stuff 7-8 weeks ago, you'd be down on it. Not only would you not be up, but you'd be down, right? So, but once again, let's go to month to date. We start to get a more clearer picture, right? What is starting to show uptrends and what is starting to show downtrends here? So once again, OIH, your oil plays, are starting to show some downtrends, right? We're starting to create a lower low on OIH. GDX is still showing an uptrend, so this is your gold miner stuff. You have AMLP, once again, it's an oil, XOP, oil. KRE is going to be your regional bank, so this is going to be more of a financial play. Once again, this is showing some relative weakness in the market, so even though they're still technically up and over SPY over month to date, they're starting to show some weakness. We're starting to see some lower lows. Now come down to the more risky stuff, the growth stuff that has been beat up over the last quarter and a half. You have your energy, not energy, your clean energy. You have your solar energy. You have your home builders that is starting to cool off. Home builders were super big, starting to cool off. But here we are once again. Look at the trend here in SMH. We're starting to create a higher high, right? Just like we saw with tech, the entire tech sector. We're starting to see that we're creating a higher high over the last few days. And we have not done this the entire quarter so far, the entire month to date so far. This is the first time we're starting to show a higher high. This is something that you should be looking at. If an entire industry or an entire sector is starting to show relative strength and create higher highs, maybe this is an opportunity to scoop something up that's been beat up. Still below SPY, but we're trending upwards. What happens in a perfect scenario? Let's say you buy something from SMH, you buy a semiconductor like NVIDIA, you buy a solar company within TAN, you buy a clean energy company within PBW, maybe a nuclear company, CCJ or something. You buy it at a discount as it's still trading underneath SPY, but we're seeing higher highs. The trend is up. What happens when this eventually pops up and over SPY? You're going to get a lot of people crowding the trade. They're going to want it now. All of a sudden, they're going to want this trade because it's outperforming SPY. But you have an edge because we're already noticing the trend upwards in very basic technical analysis. You don't even have to be a learned TA trader to understand the concept of a higher high. Is price continuing to create a higher high? That's an uptrend. Specifically, if it bucks the downtrend, which is lower highs and lower lows, this is an opportunity for you to attack a chart. within reason. I say that within reason. You don't want to throw your entire account behind something, but this is how you go and start finding some of these names that are going to give you a better return than just buying SPY. You have to be buying the things that are going to be outperforming SPY, either currently are or are trending upwards and about to, right? So let's pull it back to the 5 days. No surprise, we saw the growth names. We saw solar, we saw clean energy, we saw GDX, your miners, we saw SMH, your semiconductors. They were all starting to trend upwards on the month to date. Does it surprise you that these are the 5-day leaders? It shouldn't at all. Does it surprise you to see oil and real estate down at the bottom? Not real estate, regional banks with finance showing some relative weakness? It shouldn't. Starting to lay the framework for how you guys can look at how money flows in and out of sectors and industries, right? Go back to the 1 day. What's going on just today in particular? Worst performing is your oil, right? The best performing is your solar. Now, I do want to say one thing. TAN and PBW have been absolutely killed over the last year. Pull back year to date, look how bad they're down. 24%, 23%, and this is with a little spike up, right? If we actually look at PBW in particular, see if we can highlight just the PBW chart here. I don't know if it's going to let me do it. PBW, look at this. Since the middle of February, we have been in a downtrend, right? And we are not technically out of that downtrend yet on the year-to-date chart, but we're starting to show a little something. If we go up and look at the TAN chart, we're starting to show a little something, right? Over here, we tested it. We hit around the same higher high. Once again, fell down. But we're starting to test something. We're starting to show some relative strength here. And you can go through a lot of these year to date, and you can see how well they performed and now how recently they're at a threat to underperform. Look at XRT with retail. You don't need to be a big TA guru to understand that this created, if I move out, it's probably not going to keep it highlighted. This created a lower high. So we capped out here, dipped down, which is totally fine. In an uptrend, it's generally 2 steps up, 1 step back, 3 steps up, 1.5 step back. It's never just going to be a perfect parabolic move. But if you see that that previous lower high that we painted 2 days ago, 3 days ago, it was a lower high. We were unable to get back to where we were even during a pullback. This is a bearish notion in retail, right? So even though retail has carried a lot of the year to date, maybe, I'm not saying for sure, but maybe this is the start of a possible downtrend. We have XOP, right? XOP has had a monster run since the middle of April. If you were trading energy over the last quarter, you know that energy has just been absolutely on fire, but maybe this is something that has not converted over to the year to date, but is starting to manifest itself in the quarter, the monthly, the 5-day, and the 1-day, right? So this is your edge. Go through all of this stuff, dissect all of it. Figure out which sectors and industries are showing relative strength, which ones are showing relative weakness. And like I said, you do not have to short these. It's just an opportunity for you to maybe avoid some underperforming sectors and industries. If you do like to short, if you understand what you're doing with this information, you can find some very profitable shorts. Short underneath SPY if you like shorting weakness with continued downtrends. If you're a little bit more risky, you can short some sectors or industries that were showing relative strength and now are starting to crack. It's entirely up to you and how you like to trade. Everyone's a little different. But this information in front of you absolutely is going to give you an edge at finding opportunity. And this is something that we do, like I said, 3 to 5 days a week within the Trading Initiative. All right. If you like this content, please like and comment below, subscribe. I enjoy making this content, but I enjoy even more talking to you guys, hearing what you guys think about and answering questions, right? There's going to be a free Discord I'm linking in the bottom. I'm not there all the time. I'm with my paid group, but I'm there to help when I can. I'm going to be giving free weekly webinars and just dropping random knowledge and stuff and some higher level trading and investing information, stuff like this, stuff that most people aren't diving into. So if you want to learn more and you want to have an opportunity to ask questions from me, feel free to join the Discord. All my socials are going to be linked in the bio. And thank you for joining me. I'll see you in the next video.